Hello traders, Mark P. Markets here. My name is Mark Principato and I'm a chartered market technician. And thank you for joining me for another exclusive Bitcoin video analysis here for FX Empire. So in this session, I want to talk about the buy signal that just went off earlier today and what that scenario means for price action over the coming days here on Bitcoin. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so first things first, much earlier today, this thing was pushing 28K, all right? So that was a break of the 30K support. A lot of people overreacted. A lot of people got short, and now a lot of people are stuck in this position, all right? That's a failed breakout. When you get a break of a major support and the candle closes green like this, a bullish pin bar, that is a fake out. So like I said earlier, you can't see the price action, you can't see the order flow, I should say, inside of that tail before it's a tail. You can't see the orders that are stepping in and absorbing all that selling that was going on earlier today. My point is, because of that, you cannot react to information that you see on the chart. You have to know the probability of the area and you have to anticipate what is likely to happen there, okay? Even though at the time, it looked like there was no buying at all. Now, what did we tell our members? Wait for the close of the candle. Wait for the close. Well, we got the close, and it's a bullish pin bar. On top of that, it took out the 33.5 high, which was the high of that candle. That's a buy signal. It's a buy signal in a high probability location for longs. Now, if you're not in that, I mean, at this point, it's at 34K. This is a tough spot to be buying it now because you have to add, on top of the 5,000 points of risk that you had to assume at 33.5, you now have to add another 1,500 points to that. Okay, so you're looking at like 6,500 points of risk if you buy this thing right now. Is that worthwhile? Well, not exactly, because you need this thing to run now to 40K at least, or slightly higher to justify your risk. Can it run to 40K over the next few days? It's within reason, but there's a lot of potential obstacles here, especially in the middle of the range. Typically, in the middle of the range, that's when you want to start reducing risk if you manage to get a purchase off of the range low or a failed low. You want to start selling in the middle. It's practically there now. So at this point, you're chasing it. All right, who stepped in at those prices before the confirmation? Most likely smart money, because they're the ones that have more and better information than everyone else, okay? All the retail traders are too busy calling for bear markets and calling for shorts at the lows, which is not uncommon. So the point is this: what do you do now? Well, this thing is likely to start working its way higher if this momentum can stay intact, but the risk is a little high. So what to do? Well, wait for a higher low. If this thing can produce a mini higher low, meaning we get perhaps a little hesitation in the middle of the range, followed by a pullback, maybe this thing pulls back to 30K again, or maybe like 31K, something like that, and gives us another candle to go long, that would be a more ideal scenario because the reward risk would be much more attractive off of an attractive level, as opposed to chasing this now and hoping that the momentum sticks. If you buy this thing now, okay, it might continue, but if it hesitates around the middle of the range and you get out, perhaps you make 1,000 points or 1,500 points, it's not worth the risk you had to take. Okay, so just because a market goes your way doesn't mean it's always worthwhile. That's the point that you have to realize in these situations. People are always chasing money, but that's not really the objective here. The objective is to manage risk, and that is what we emphasize all the time. So I'm going to leave you with that. If you have any questions about that, you can find me at greenbridgeinvesting.com. I'll put a link in the descriptive portion of this analysis. But again, the whole point is risk first, okay? We have a rules-based strategy which prevents us from overreacting and just waiting until the market aligns with the rules. It aligned at 33.5, but this was a tough one to take because it moved so quickly. So we just wait for the next one. I mean, it's really not that hard to wait. People get all caught up with the emotions of missing out, but That's just human nature. You have to be able to avoid that, and rules help to minimize that. Again, I'll leave you with that. If you have any questions, you know where to find me. Mark P. Markets, greenbridgeinvesting.com. Thank you so much for watching.